I'm joined now by Lawrence Amadi, Head of Tech Assurance at KPMG Nigeria, to review some of the headlines in greater detail. Welcome back to the show, Lawrence.
Thank you very much, Rolake.
And compliments on the season. Great to have you back.
Thank you.
Trust you to start with a football story. Your obsession with football is pop. Are you a Man U fan?
I'm a Chelsea fan.
You're a Chelsea fan?
Yes.
Okay, so are you looking with glee at this acquisition by Jim Ratcliffe of Man U, or are you thinking, oh, not good for the rest of the football world?
So, first of all, let me say compliments of the season to all your viewers. If I look at the acquisition by Sir Ratcliffe, I think it's one that tells you this guy who's a fan from boyhood wants to now play a role in decision making at his boyhood club.
Okay.
So I reckon he says, look, it's about time I do something. He's a maverick billionaire and, very keen to say, look, how do I also dictate play, dictate some of the recruitments we have in the sports directorship functions and the likes. And I think that's what's driving some of the passion.
Well, I mean, but do you think he's also frustrated? Man, you have not won the Premier League since 2013. So part of this acquisition, it's not just going to be him sitting on the sidelines. He's actually going to want to roll up his sleeves and try and deal with some of the things that are happening.
I think he's going to want to do that. If you see the number of Glazers out that they've had over the last 2 seasons, I think it's a lot of noise.
Okay.
The Glazer family is also saying, okay, you know what? We can do with less pressure. Happy to sell. I think they make good money as well, if you ask me.
Yeah.
Given how much the entry point fee
they
pay.
bought it at 709 million, so that's
there we go.
100% increase in valuation.
25% stake.
Yeah, 25% stake.
Yes.
Yeah, pretty major boon there for the Glazer family. The Qataris were outstepped out of this ones, and they've been making their inroads into the sports world in terms of investments.
Absolutely, and since hosting the World Cup, I think they want to have a stronger stake in the game.
Okay.
You can see Saudi also making a lot of move, bringing out the big names, So I think it's just Middle East Asia trying to make a statement in global football.
Yeah, indeed. Let's see if all this acquisition actually makes a difference to their Premier League prospects in 2024.
But I would say 20 titles. So you still have to give it to Man U.
Okay, let's give it to them. I'm an Arsenal fan, so yeah, it's whatever. Anyway, Israel has granted $3.2 billion for a new chip deal and been backed by the US. In the midst of all that's happening in the Middle East with Israel and Hamas, what was the significance of this particular deal?
I think it sends a message to a lot of governments globally that you've got to think about the future a lot more. First of all, what does Intel do? It's an American company. They're in the semiconductor space. They do quite a bit in the IT hardware space. We all know chips are going to be so important going into the future. So it's investing for the future. And, Israel is currently caught up in, a very dicey situation at the moment. But it's not stopping someone who's thinking and saying, you know what, let's invest for the future for
I mean, clearly there's a business and commercial rationale, but to what extent is this a way of endorsing and validating the support the US has been providing to Israel in the midst of this crisis? What do you think?
So, it's a very dicey topic.
Okay.
When you think about the support they get, because again, the Middle Easterners feel like there's that bias against them. But I think Israel making this sort of move, certainly just reassures America that, look, we're still going to be in bed for a long time to come.
Yeah. So we also have this story on global deal making, which is down. It's below $3 trillion for the first time in a decade. That's not too surprising, given all the geopolitical issues, the tensions, the stock markets, commodities markets. Where are some of the big trends with this global deal making, and why have we had this slump?
So I'll start off by saying the world has to remember that COVID never got ended.
Okay.
So we just never got any endemic pronouncement. The world just carried on.
Okay.
And as the world carried on, shareholders also started questioning the sort of value they get from M&A deals. And that's why some of them started, getting a bit more conservative with big ticket deals. And this certainly played a role in slowing down some of the deals in 2023. The big tech deals we've seen have happened in the sciences space.
Okay.
And we've seen a lot of big ticket deals in the fintech and technology space.
Yeah, of course, and we'll be talking a bit about those ones. So there's been quite a lot of M&A activity. But in terms of how you think emerging and frontier markets have fared compared to advanced economies, in terms of the global flow of capital, what are some of the things that have been highlights for you?
Key highlights, I think Africa continues to be a very interesting space. Parts of Asia continues to be interesting. The world is looking at where would population increase be in the next 10 to 50 years. And that's where most of the flow of funds, seems to be going to. Recently, KPMG published, doing deals in Africa, thought leadership, and there's that whole focus on most of the top corporations coming into Africa.
Yeah.
We see a move in Ghana, in Kenya, and of course in Nigeria.
And what are the really interesting sectors that have been the target of those deals?
So target sectors, solid mineral, the mining space, digital, because there's opportunity to also, spread our connectivity and broadband a lot more. And I'm sure that the Minister of Communication certainly also is positioning for some of those opportunities in Nigeria.
Yeah, interesting time. Now, streaming businesses. We've all been watching the Netflix Christmas rom-coms this year. Maybe you haven't, but I have. And Netflix seems to still be head and shoulders above its peers. A lot of the traditional media houses that were trying to get into streaming business have incurred losses. What has been wrong with trying to copy Netflix? What have they missed? What tricks have they missed here?
So I'll put it this way. If you're not traditionally built to be a lean and agile company, you struggle. Netflix, very, very bullish company. The guys are driven. They've got a culture of get it done now, and and we've got to move. If you look at the traditional players, slightly slower. They've got massive workforce. They've got bureaucracies to go through. So those impact businesses in general. In 2018, I think Time Warner and AT&T merger happened.
Yeah.
I don't know if that worked out really well, but it just tells you that, look, you've got to be leaner, you got to be faster, you got to learn to fail fast, fail forward.
Yeah.
But you got to be quicker. That's what Netflix is doing correctly. And that's why these guys are struggling.
So there's been a slump of about 5 billion in losses, revenue losses for these streaming services. And it's interesting because even in the market, in frontier markets like Nigeria, if you ask somebody whether they have Disney streaming or one of these others, you don't find anybody who subscribes to these services. So clearly they need to grow their market share. But interestingly, a lot of them are actually moving to merge and create these big, large corporations. That sounds a bit counterintuitive because the idea of being nimble and agile, merging and bringing your workforce together, is that really going to help them?
Well, one of the things we learned in business school is when you have these mergers happen, if you're not very decisive about the right team size, the right organizational size, and the guys who should do what, then you're going to have those troubles. If you still have the traditional roles, again, there's a reason why you would find a chief innovation officer in a Netflix.
Okay.
And you may not find one in the traditional players, again. So it just tells you where's the priority, where's the focus, what are the guys doing differently, how they're posturing, and how quickly can they imbibe digital transformation initiatives into their businesses.
Yeah. We've got one more story to get through. We may not explore it extensively because we're going to be talking about tech, but the New York Times is suing Microsoft and OpenAI for copyright infringement. Tell us what exactly is going on here.
Well, I guess my first reaction when I saw this was, where do you draw the lines on privacy?
Okay.
Because if you've made information available publicly, either on your website, the terms and conditions
around that.
Yes, around that.
Although the New York Times might argue a lot of that is behind paywall. So it's kind of semi-private.
So again, if you look at the ChatGPT and the entire OpenAI concept, what's happened is they've used publicly available information to train.
Of course, that's the whole idea of machine learning and language models.
Correct.
Yeah.
So it's now very difficult, and it'd be interesting to see what the U.S.
court says. It's going to be a very difficult one to rule on. And, I was speaking to someone, yesterday about the whole the legal intersection with technology is going to be a big and booming area in 2024. But we'll be talking more about tech and AI and all things tech, I guess, in a short while. Thanks for staying with us on the show. You've been hearing me speak to Lawrence Amadi. He's going to stay with us. And after the break, I'll be joined also by Folusho Badamosi, tech guru and executive director of Junior Achievement Nigeria, to discuss global tech trends in 2023 and beyond. Stay tuned. Welcome back to Business Week on Arise. If you heard me earlier on the show, I talked about the good news which Nigeria received, which is that the 2.5 billion of the total 3.3 billion cash for crude swap deal between Afrexim and NNPC Limited has been received by Nigeria. Independent sources within the oil industry confirmed to us, Arise News, on Friday, that the deal, which was initiated several weeks ago by Afrexim with Vitol, Sahara, Oando and other traders, has materialized. Now, the finance minister had talked about receiving this money as part of government efforts to stabilize the FX situation in the country. And before we get into today's discussion, I just wanted a bit of a take from Lawrence, our guest in the studio, on what this actually means and its significance. Yeah.
Thanks, Rolake. So what does it mean for us? I mean, it just helps us manage the pressure a bit more.
Okay.
We know a lot of companies depend on the USD for doing business in the country. The central bank has struggled in the last 2-3 years to stabilize the economy. Inflation is hitting, an all-time high as we speak. And this is because we're a very import-dependent country.
Right.
So this deal comes at a really good time. We need more of such arrangements, but we've got to also look at the terms. What are we paying as a country?
Yeah. Yeah, and interestingly, it says it's a cash for crude swap deal. So, of course, oil production is involved, and we know there's a lot of work we need to do around our oil production to get it up to levels going forward.
Correct.
But in terms of what you would be telling your clients in 2024 about the FX situation and FX outlook on the back of this deal, what would you be saying to them?
So we just have left an election year.
Right.
With 2023, it was a very dicey, gloomy picture because you just don't know where things will go. But I think with this sort of deal, 2024, hopefully, will be a lot more stable, focused.
Fantastic, fantastic. Well, we'll be monitoring that story more here on Arise News. So please stay tuned throughout the course of the day and, of course, the coming week for more on that deal that was struck with Afrexim and NNPC.